here we've got, it's April now. Happy April, April Fools, April 1st. So I thought we'd recap what the biggest monthly movers were in major FX pairs for the month of March. And we'll see some not surprises. I'm sure you already have some speculation, some hypotheses for what was moving the most, but I think we'll churn through the top 10 of major dollar and non-dollar pairs, and then try and look for some trends. There's some cool takeaways. When you're looking at this intraday, hard to kind of zoom out and see where we're at. So we'll take it from number 10. We've got Australian dollar, New Zealand dollar, popular Australasian cross, with New Zealand dollar coming out on top. Percent change in March, 0.85%. Coming in at number 9, we've got New Zealand dollar, Canadian dollar, up 0.89% in the month of March. So New Zealand dollar again coming out on top. Number 8, going over to Europe. We've got the euro versus the pound, change in March, plus 1.4%. Coming in at 7, we've got Kiwi, New Zealand dollar versus the U.S. dollar, up. New Zealand dollar gaining on the U.S. dollar in the month of March to the tune of plus 1.42%.
Hey, Glenn, is this from high to low or from low to where we settled the month?
This is start to finish. So not incorporating, and we'll come back to this gigantic run up. New Zealand dollar could have been the outperformer.
Could have been
if we took it mid.
That's still
mid-month.
Interesting. We gave back so much ground, but still a big percentage move.
Yeah, absolutely. Coming in at number 6, we have British pound versus the Japanese yen, up on the month 2.02%. Number 5, U.S. dollar, Swiss franc down 2.03%. Another European currency taking it to the U.S. dollar. Number 4, cable. We've got British pound against the U.S. dollar. Change in March, a pretty staggering plus 2.64%. And coming in at number 3, euro yen. Some say the most popular dollar cross, non-dollar pair. Euro against the yen, appreciating 3.42% in March. Number 2, another euro against the Australian dollar, coming in at plus 3.48%. And number 1, I'm sure you would have guessed it, nothing outperforming better than the euro against the U.S. dollar in March, up 4.05%. Just a crazy move, and took it there very early on. I mean, we got to where we finished by the 10th day of March, and did get higher, but still settled at the time I clipped this yesterday above 108 after starting the month around 104. So here we've got the full list. We can go back to any of the charts you want to see, but just a couple takeaways from me, and then we'll look at the actual tape action. U.S. dollar, not its month in March. A lot of currencies able to capitalize against it, and I mean, dollar yen now would be in the mix here. Yesterday, it ticked back higher above 150 at the time I clipped it. So it was at around 1.2%, and then it got erased yesterday to around only 0.6% to the downside. So that did not make this list, but very easily could have now. Euro across the board taking the 1, 2, and the 3 spot. Sometimes you think that this maybe would have been a dollar story, but now in March, definitely a euro-led story. Taking it to U.S. dollar, Australian dollar, and the yen for a lot of percentage gains. New Zealand dollar was a healthy performer, but man, it could have been a lot more, as we saw and as you called out. could have been to the tune of multiple percentage points against a lot of pairs, but able to not only capitalize against the US dollar, but against the other commodity currencies as well, Canadian dollar and Australian dollar, to lesser effects. And the British pound also hanging in there, but I don't know, what it looks like to me is a lot of euro momentum, a European Union-led story, where of course they're going to get some reciprocal love, but not outperforming in the same way at all, as well as the Swiss franc taking some of that as well. What are you looking at? What do you want to go back to?
I think this is a fantastic walkthrough because it really adds zooming out a little bit to context and what's tradable. And I think when you look back, I mean, tariffs have been on everybody's mind January, February. Well, tomorrow's supposed to be the big day. You would have thought March would have been all about buying dollars because everything's going to be more expensive. This is how the market prices efficiently. Market was having none of it. They were like, yeah, go ahead. You do whatever you want and possibly damage your economy. We're going to look through the lens of that. And I think that what we saw in terms of movement was really fascinating. For me, I think the idea that overwhelming euro strength from the dollar and non-dollar pairs says that we were just talking about a range to trade in euro, and that's an awful lot. That's a dramatically higher range than it was early last year, which we would have said is 102.5 to 105.
Definitely.
We're now saying it's 107.5 to 109. But when you look at the momentum, not only against the dollar but against everything, you accept the range. Yes, I will buy that, which I would have thought 3 months ago was a very high level because it's 170 pips off the highs. That's a tradable range because you're going to where the market is giving you and demonstrating via tape action strength. The Kiwi story, boy, it's interesting. The fact it couldn't hold on to the bulk of those gains. I mean, that was multi-year lows. It plumbed.
Yeah. Really right around the month start. So, I mean, we got as high as 58. Not sure what the percentage would have been, but I'd guess 3, maybe 4%,
right.
Low to high.
And here's a case structurally. We're back through where it had paused the first time. If you want to, is it cheap? Sure, it's still cheap. Not quite as on fire cheap as it was at the lows, but tape action wise, it's not telling me that there is a lot of interest to, in other words, the construction of what we're seeing in euro, higher highs. When the pullbacks come to the downside, they're higher lows. They're not plumbing down through the range. Here, it's plumbing through the range. I'm not saying that means it's weak enough for me to sell, but I think when you pick, don't try to pick the catch-up. Well, this is given back the most, so it should snap back. Accept what the market's giving you, which is a little bit less productive environment. Now, long term, if you think the dollar is going to have a hard time this year, this is an interesting pair. Aussie too, even though it has a given. But if you're looking for a scalping opportunity, I think you've identified the ones. And things like euro yen, guys, we should all be comfortable that whether it's got a USD in base or quote currency or two others, as long as there's liquidity and tape action, we're good to go with it. It's the whole thing we talk about in the world of tasty options. If the underlying has liquidity, I don't care what symbol it is, as long as I can get in and out and it has volatility. Same thing here. And this is one that is, again, holding an interesting amount of the bounce here, and plays a little bit out the same way. And I think it's this has been a pretty big move for a pair that usually doesn't have that same correlate. Even the euro sterling pair, which was really interesting. And was euro sterling number 4? This is a big move. This speaks to, okay, what does that tell me? Euro is killing it against the dollar. It's killing it against everything else it trades against. There's a lot of strength out there. Can that revert? Sure. But I am going to, till the market demonstrates it, I'm going to lean. If I want to be long, I'm going to lean on the one that's performing on a pullback. If I want to be short, I'm going to pick one of the others.
Yep, you got it. Yeah, a lot of potential opportunity out there. A lot of different pairs moving.